when you watch this video is going to be in the morning. What's up, dudes and dudettes? This is Due Diligence here. And tonight, or for you, it's going to be in the morning, I'm going to present you a very interesting business dilemma about crude oil or natural gas or energy and whatever, right? It's basically about oil. But because oil is closely related to natural gas, so the production cycle and the production patterns are the same. All right. First of all, why am I bringing this, topic up? Well, it's simple. So yesterday after Fed meeting, right? After Wednesday, we have the Fed meeting, and after Fed meeting, people's inflationary response is pretty interesting. As a lot of people are dumping oil stocks and, transition into a very, how to say this? I think it's a very quick or steep or fast overreaction in terms of the inflation outlook. The chairman of the Fed never said that inflation is really gonna get better. To paraphrase or to understand what he's been saying is in the short run, he does not think that the inflation problem is actually gonna go anywhere, but in the long run, it's going to go back to the 3%, annual prediction, which is fairly interesting. And if you think it logically, that means we're going to have a lot of fluctuation in the upcoming month. And as someone who's really bullish on oil, here's the reason why I think the market is reacting, and here's the reason why I think oil is going to keep rising. All right. So what is this? What is this thing? This is the average or the current gasoline and crude oil rigs count right now. So as far as this thing goes, the oil rigs count, we're standing at right now. So at the end of this report, the rigs count is around like 300 rigs, right? That's just at one of the lowest point in the history of the United States. And then right now, because we're ramping up production, I think we're around 600 rigs active. And the problem with that is the US demand of oil is way bigger than the supply. Because as you can see, if we just go back to 600 rigs of oil, we most likely was the increasing spike of travel during summer, and because the airplane companies or the airlines are working functionally with all reopening, wouldn't it be rational to see more demand on the customer side? And the interesting problem is the supply of oil never really increased that much, right? If we look at a lot of oil reports, no one is really either actively looking for new rigs to create more oil or trying to reactivate old rigs to produce oil. I mean, in all fairness, if you just look at this graph and you go back and look at, a lot of the oil price forecast, there's something fairly interesting. When the oil rig count is really low, for example, in 2016, at this point, the oil rig count is actually super low. And then as the US ramp up production, the crude oil actually started to increase all the way until about 2018, and you have a little bit of anomaly here, and you go down again all the way to 2020. I mean, there's a reason for all of this. The reason why we don't have as much rigs as before is because the entire oil industry is in transition. Okay, like a lot of companies are actually transitioning into new energy. For example, right, one of the companies that we're interested at is SLB, which in all fairness has a positive correlation when you look at the graph or the price chart for the stock. If you do it, I can't do it on Thinkorswim, I'm not good enough. But if you do it on the Chinese app, you realize that you see this correlation. Like without getting an R value and doing regression, if you look at the correlation with the price ratio adjusted, you will see that if you see the graph, so the purple one here is crude oil daily average, right? And then you see all of the other candle charts on the bottom of here is the average price of the stock. And you see strikingly what? You see a correlation, right? And the oil actually will fluctuate more than the stock price of this company. Why? Because this company diversified into battery plantations. And they're still running their oil business, but the oil production are significantly lower than before. Right? And if we just think about it in a macroeconomic sense, right? Let's go back to I think it's BZ, yeah, go back to the crude oil. Let's just say right now we have more demand than supply in oil, which means it will short-term drive the price up, correct? I mean, according to micro and macroeconomics, how it works. And what is interesting is if you keep the supply as it is and the demand keep rising, what will happen? The price will keep rising, right? And what else would happen is, what is interesting is, we have the Iranian problems. Problem in Iran, the OPEC is not increasing supply anytime soon. Nope, it's not increasing supply anytime soon. And the thing is, all of the big funds already defunded a lot of their investment into oil. No investment into oil, right? No investment. Which means in the near future, there are not going to be a lot of rigs, or there's not going to be, my prediction is there's not even going to be enough rigs to produce enough oil to supply the demand. So what we will do is it's going to create a price shock towards the entire oil market. Fascinating, isn't it? But guess what? Due to the Fed minutes, everybody is dumping oil stocks. So if you look at this, go to the daily chart. Let's look at here. Right? We went from almost $34.50 all the way down to $32. And what does it really mean is we're literally driving the oil price down back to about a month ago. Are we having enough supply? Are we really satisfying our consumer needs on the supply side? No, the supply didn't really increase that much, but our demand might be twice the amount of before. So as a reasonable human being, we will see a significant price increase. But it didn't reflect on the stock market right now, right? And let me show you something else which is fairly interesting is if you come over here and if you go to the is it the daily chart? I think it is the daily chart. If you auto zoom, right? If you auto zoom, let's go to the weekly chart. And if you auto zoom, if you look at by the end of 2020, look at here. By the end of 2020, this is where you actually were forecasted that OPEC would probably decrease production. So either way, the entire, price of oil would increase in 2020, if not for the pandemic. No? If not for the pandemic, the oil price will increase, right? But pandemic happens, that's why we see all of these shenanigans. And we're right now at here. Do we agree or disagree with the fact that we are probably going to have more demand than COVID and pre-COVID, because people don't really travel that much during January, except after the New Year's or whatever. But people do travel in summer. So in the summer months, we will see a price increase in oil. Why? Because there's more demand, simply. And then right now the supply stays the same. Probably going to stay the same over the next half a month or another month, right? So why is it behaving like this? Why? And then we are actually facing a trader's paradox. as I'm talking about this. But more like I am facing a trader's paradox. So if you look at the minute chart, if you look at the minute chart, so right now, let's see. Oopsie. So let's say if my average price is somewhere around, let's just say hypothetical speak, I think it is actually around, it's around $33 because that's the average. I set my price point, like usually I take the local max and the local mean, or the previous local max and local mean, and then just do an average, and I will try to, make sure that the price range fluctuates around there, so then I can basically, cut the losses over here and then make the profit if it goes up, right? Like you build up positions and if it shoots up, right? But the interesting part around here is, all of a sudden it drops around 5% today, which is rare. The almost over the past 52 weeks, which is over the past year, right? The biggest drop daily in oil is only about less than 4.6%, which means today it's a huge volatility for the oil market. And guess what? I think tomorrow is going to rebound. But to what point it will rebound is much interesting than whether it's going to rebound or not. Why? Because on average, oil stock does not fluctuate 3% per day. And usually it fluctuates around like 1.2% per day, plus or minus, right? And then as a reasonable investor, you got to think about, whether I should, let's say right now I have 10K in oil. And then if you can only make 3% per fluctuation, and because we're already at this line, which means that will probably eat 1.5% of our entire profit anyways. So our maximum upside will be 1.5% of the 10K. And we're not building a time valued, which is a long position over time, no? And because I'm a day trader, one of the choices I have to make is I can either tomorrow if it didn't go back to my average price range, I can just cut it at a loss and put it into a stock like AMC, which will make me around, maybe around 5%, or if I do it right, will make me 10%. That's way more worth it. But in my in my heart or in my mind, I know that in the long run the oil price will still increase. This is where things get interesting, because when you see a market shock like yesterday, or like, more like today, when people are dumping, a bunch of oil, is you have to, as a trader, you have to figure out, you have to solve this dilemma for yourself. Like there's no right or wrong answer, because eventually, the price for SLB is probably going to go back to $40. But how long is the question? Because your capital is locked inside of the stock. There's no liquidity, which means for a day trader, I cannot make other trades that will be beneficial. Like I will be talking to my friends and talking about, I made a quick $50 in TRCH, or I made a quick $50 in Clove. I made a quick, $120 or $200 in BB. And the only reason I'm not really making that much money this week is because, I lost some money in call options because I was actually really bullish on oil. And then I learned now that I shouldn't be so bullish on oil in a very short time frame, because my expectation is not going to be met by the market itself, because the entire market is literally working against you as financial institutions, and the government doesn't want the oil price to increase that rapidly, right? We have to think logically here. And as we think logically here, we use a logic to make more money, and everybody on this channel who's watching my videos or our videos are here to learn something. And with the content that we push out, I wish you guys all the luck, and I wish you guys learn something from my video, so you don't make my mistake, A, and B also make some money. And again, at the end of my video, I always say, hey guys, I am not a financial advisor, so I do not give financial advices. And everything on this channel is for shits and giggles. And everything is for entertainment purposes only, right? And don't forget to smash that like button and subscribe. And thank you. This is it for today.